China has admitted to a dramatic 25% drop in crude oil imports from the Middle East in March. The decline comes as the Strait of Hormuz approaches a substantive blockade, severely limiting tanker traffic amid ongoing regional tensions. China, the world's largest crude importer that depends on imports for 70% of its consumption, recorded the sharpest fall in purchases from 6 key Middle Eastern nations. According to the latest statistics released by China's General Administration of Customs, imports from Saudi Arabia, Iraq, the United Arab Emirates, Oman, Kuwait, and Qatar totaled 122.6 million barrels last month. This represents a 25% decrease from March 2025. 4 nations saw steep reductions. Saudi Arabia fell 30.7%, Iraq 46%, Kuwait 52.3%, and Qatar 64.5%. Overall, Chinese crude imports reached approximately 362 million barrels in March, down 2% year-on-year. Imports from Russia rose 14% in March after the United States eased sanctions on Russian oil in mid-March. China also increased purchases from Brazil to 2.5 times the previous year's volume. However, imports from Malaysia, a major transshipment hub for Iranian crude, dropped 39%. U.S. Treasury Secretary Bessent stated at the International Monetary Fund and World Bank meetings that Chinese oil tankers will no longer be permitted to pass through the Hormuz Strait, cutting off access to Iranian petroleum. Since the beginning of the year, China's crude supply has faced pressure from 3 directions. U.S. and Israeli joint military strikes on Iran have created high uncertainty for sanctioned oil sources. The arrest of Venezuelan President Maduro led to a complete halt in crude loadings from Venezuelan ports to China. The effective suspension of Hormuz operations now threatens more than 7 million barrels per day of legitimate Middle Eastern crude imports. Nomura Securities China chief analyst Lu Ting noted that China imports 73% of its crude oil and 40% of its natural gas, with roughly 50% of crude imports and 16% of natural gas transiting the Hormuz Strait. In 2025, China's seaborne crude imports averaged 10.27 million barrels per day, a record high, including an average 1.38 million barrels per day from Iran that accounted for 13.4% of the total. A March 17th report by the Legal Department of the China Council for the Promotion of International Trade acknowledged that Hormuz disruptions affect more than 40% of China's oil imports and key raw materials used in chip manufacturing. Over 40% of imported crude must pass through the strait. Shipping routes rerouted via the Cape of Good Hope now face 10 to 20-day delays and freight costs more than 50% higher, compressing profits and raising order default risks for Chinese exporters. The report also stated that Middle East demand contraction has reduced some Chinese export orders by 15 to 20% as local resources shift towards security and defense, weakening infrastructure and consumption demand.